for the next 20 minutes or so, I'll talk about the market in Vietnam, in Phnom Penh, in Siem Reap, the opportunities that we've seen, the things that we think are sustainable. I'll stay well clear of foreign exchange, foreign ownership laws, licensing, setting up companies, and let Gil talk about that a little bit later on. I regularly travel between Singapore, Phnom Penh, Vientiane, Hanoi, and Ho Chi Minh, and it astonishes me that land prices in Phnom Penh are about a quarter of what they are in Ho Chi Minh and Hanoi, but rents and capital values for completed apartments are actually 15 to 20% higher than Hanoi and Ho Chi Minh, and I'll try and explain that and why that is the case and whether that is sustainable. I appreciate many of you have attended some of these talks before. You've heard about some of the projects that have been launched in Phnom Penh over the last 3 or 4 years. You've seen some of the prices. They have consistently performed well. Our own business in Phnom Penh is interesting. We do about 15 to 20 residential leases a month. So if you are going to invest in some of these projects, the one thing that I think is very important is there a rental market? Is there a sustainable rental market offering you an attractive 6 to 8% yield? Because whatever we say about growth, foreign exchange, tax, you need that premium yield to get excited. Sucked out all the regional press for the last 10 days. And you have to look quite hard to see what's going on. The local press is colourful. It tries to stay as much away from politics and talk about good stories. So some of the information I've got today is quite anecdotal. We heard from the ambassador about growth. For sure, it's been going along at 5 to 8% for the last 7 or 8 years. It's probably one of the least written about economies in Southeast Asia, apart from East Timor and Laos. But you can see here, obviously, the stories that are coming out and the investment that's going in seems to be quite strong. It's often companies that are looking to do something slightly different. Obviously, the businesses that are successful in the industrial parks are very much focusing on the cheap cost of labor, and I'll talk about that in a minute. You can see here again where the main trading very much like other the smaller emerging developing Southeast Asian countries. China is our biggest, Cambodia's biggest trading partner, and it can very much dominate the whole foreign policy and the way that investment licenses are granted. You can see here, Cambodia runs a small trade deficit, but again, some of the infrastructure which is so lacking in Vietnam, Laos, and Cambodia, Myanmar, and the LVMC countries, is dominated by obviously China's desire to get involved. I think Cambodia gets a big tick for growth, a reasonable tick for inflation. Something that's, I think, a very important part of the dashboard of looking at these emerging markets is inflation can move from one quarter to another, or one half to another, very, very dramatically, as can foreign exchange. Countries like Vietnam and Laos, have got very, very small foreign exchange reserves. They're very much dependent on importing materials from China, processing it, and then exporting. Those of you who want the slides, they'll be available in English and Chinese at the end. Another thing that's really important for these markets is how much of it is locally resourced, and how much of it is driven by, particularly for real estate, how much of it is dominated by local demand for office space, local demand for industrial space, local demand for residential. If the reason the market is growing between 5 and 8% a year in terms of capital values is because of Singaporean investors, that's probably not a particularly good reason to invest, because that tap can dry up very, very quickly. So it's very, very important to work out, if you visit the country, if you're going to look at some of these projects, what percentage of them are being bought by overseas investors. Vietnam, similar to Cambodia, opened the foreign exchange, sorry, the foreign ownership limits on the stock market and the foreign ownership on property just in the last 18 months. And it's been interesting to see how much of it is, which projects are being bought by foreigners, which projects are not. And still 95% of all sales, certainly in the Vietnam context, and I believe in the Cambodia context, is done by locals as well. That seems sustainable. If it gets to 90% local and 10% foreign, then things like foreign exchange, interest rates, and tax rates can change the story very, very quickly. And that market will disappear practically overnight. So again, this dashboard of things is important. Just talking to Guillaume earlier, I believe the fourth or the fifth company will be listed on the stock market, I think, on Monday. So again, there's a very, very small amount of public capital markets. It's mainly small, medium-sized enterprises. Unlike other bigger countries, the state plays a limited role in business. It's not like Vietnam, where the state-owned enterprises are the main driver, or have been for the last 20 years, the main driver of growth. The infrastructure, as you drive or as you arrive in Phnom Penh Airport, you come to one of the most modern, if not the most modern airport in Southeast Asia. They've just extended it. They've got the best duty-free shop. They've got a stationery, so they've got the best bookshop of any of the places I visit, except Singapore in Southeast Asia, and you can get a great cup of coffee. So going to Phnom Penh Airport, Siem Reap Airport, is actually a delight, unlike going to Hanoi or Ho Chi Minh or Vientiane. But infrastructure, as you come out of the airport, you do tend to get completely the wrong time of day, particularly if it's just rained at 5 o'clock. You then enter a 6-mile traffic jam. I'll talk more. I'm sure Guillaume lives there. I'll talk more about the traffic. But take a good book. That's probably why they've got a good bookshop at the airport. The Phnom Penh itself is a relatively small city. It's growing very fast. It's obviously it is the place, apart from Siem Reap, where there's the centre of commerce. It's divided up into these wards and districts. Much of it is originally by the river. There's an island in the middle of the river which has been joined up by a bridge. And there's certainly around the diplomatic area and the main business area a large amount of construction going on. I'm not sure exactly how many cranes I can see from the top of our building where I have our office, but I can certainly see about 40 to 50 residential condominium office projects from our boardroom. Going back 5 years ago, I could probably see about 3. So the amount of construction is up by many, many times. It's not just a 3 or 5% increase. It's probably about 3 to 4 times. But you can see here as well on the bottom right, for those that are looking at what's driving this, you can see land prices. Again, land prices in similar districts in Phnom Penh, sorry, in Hanoi, which would be 3 times what they are here. But you can see here at the bottom right where land prices are. The land acquisition is dominated by local players, and it seems to be quite easy to get comparable data. Again, going back 5 or 6 years ago, there would be a trade at the site every year, and it was very difficult to do proper valuation work. It's now considerably easier, and you can see the types of development. Mainly 6 to 8 times plot ratio, quite high density, and often on very small roads. So if you are buying, it's very important to go and look at the property, to go and look at just how is another 100 cars coming out of that road going to be. Also, again, a big driver for residential property obviously is things like schools, and many international schools is extremely important. There's some big international schools, just like other things in whether it's Singapore or Ho Chi Minh. The more affluent families want to educate their kids at these international schools. You can see here that originally there was a big influx of Korean developers about 5 to 8 years ago. They were very, very active in office and the residential market. And more recently, it's been Taiwanese and mainland Chinese. And you can see here the left-hand graph, how the amount of new supply has increased dramatically, particularly in the last 2 years, from 2014, and how it will increase to 2018. So this is a city where everybody, given the choice, wanted to live in a villa or a townhouse, and now as the roads get congested, the city gets bigger, they're moving slowly into a condominium. And it's important to feel comfortable that for that to happen, that you will find, if you are going to buy, that you will find a buyer that you can sell on to, and that you can find a tenant. And although I'm very proud of our 100, or as I said, 10 to 12 residential leases a month, you need an awful lot of companies doing 8 to 10 residential leases a month. So is the expatriate population going to take a large portion of this new supply? I doubt it, because it's pretty flat, that population, or are the locals going to move into condominiums? But if they do, they won't want to rent, they'll want to buy. So again, these things are important. I'm not sure, I think the press likes to use the word like surge. Certainly there's a surge in supply, but it's difficult to see whether there's a surge in demand. And of course, like all these things, it's very, 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 very difficult to get accurate figures from the developers as to what their real sales rates are. These are some of the projects that you can see. They're right across the city in all the districts of the city. Wherever there's available land, there seems to be a big condo project going up. These are, as I said, it could be anywhere from 40 to 400 units per development, and we believe that some of them are as big as 1,000. Often they're in phases. One thing that they certainly do better than the Vietnamese, and this is a similar track to what's going on across the whole of Vietnam, they seem to be very good at using Singaporean or Malaysian architects. The quality, certainly in the design, may not be quite as good as Singapore, but it's certainly a lot better than we're seeing in Vietnam. So I think this is a big thing. They obviously prepare to pay very high architectural fees, and we'll see as they get finished whether they're as good. But you can see here the price per square meter. We're doing work for some of the bigger Vietnamese developers like Novaland and Vincom, and also some of the foreign developers like Hong Kong Land. And we certainly wouldn't see a price average figure above 2,750 in some of the bigger markets. So it's important for you to judge whether this is sustainable and how long that is sustainable for. You can see here the price index, so obviously Singapore is well scaled. In terms of service department, again, some of those departments could easily morph into service departments. There seems to be a strong movement away from older guys like Neil and myself being sent to Cambodia, and we're seeing more and more young Asian expatriates, Filipinos, Thais, Singaporeans, Taiwanese and Koreans doing jobs that may have been done before, and obviously their housing requirement is different. They don't typically want to live in a big villa. They're much more happy with service departments and apartments to let. So again, that is one thing that's important. You can see on the right-hand side, Ascot, Somerset coming to, I think this building is under construction June 2018. In terms of the office market, there's some very attractive, the skyline of Phnom Penh is changing. The tower is really quite a very interesting design that dominates the city. Hong Kong Land is putting up a big office building, and all around town there's 6,000 to 8,000 square meter buildings under construction. And again, not unlike Thailand 20 years ago, or Manila 25 years ago, or Hanoi, Ho Chi Minh now, many of the multinationals, NGOs, diplomat missions, and SMEs are moving from these old villas to, I believe DFDL is still in an old villa, but I'm sure many of your competitors are beginning to look very much closely at moving into these office buildings. Again, though, the rent, 25 to 30 bucks, puts it a little bit above Bangkok. You can see here the average rent for the but again, if this sector isn't growing, the residential sector is not going to be sustainable. So I'll just spend a few minutes on this, because this is important. This drives wealth, this drives jobs, and this creates demand. So for these emerging markets, very often if the residential office isn't in parallel, then something is going to go wrong. So it's important just to see what's going on. Yeah? And as I mentioned bottom right, the companies are beginning to move out of these older developments, these old villas that they moved into in the late 90s when business started to get interested in Cambodia again. You see the strata title, very common in Singapore over the last 30 years, and in Hong Kong, beginning to be an issue here. Many Cambodian businesses want to own, like the Singaporean business, they want to own their own property, and being able to buy their own floor is often considered to be a good thing. It also helps developers with their cash flow issues. But obviously, most of these developments are still, apart from the foreign ones, are mainly small and medium-sized companies that may have been in garments, may have been in furniture, may have been in footwear, moving into property. So most of the developers that we meet in our daily life are half my age, and this is their first or second building. Squeak. Flash. No, it's going to flash. The retail market, again, a very interesting market. When I first started going to Phnom Penh about 12, 13 years ago, very difficult to get a cup of coffee, difficult to buy a newspaper, difficult to buy a handphone, difficult to buy a pair of shoes that weren't. I went across one day with the guys from Parkson about 10 years ago when they first looked at and they went. I think we went to 20 different shops. They were fascinated by underwear and footwear because they could tell from the labels where the sneakers or running shoes were made, and everything was a re-import from a parallel import from China. Now, with better distribution, more money in people's pockets, greater requirement for a shopping experience, whatever that is, you'll see that the amount of retail, purpose-built retail, is really changing. Again, you can see the rents in the top right-hand corner. Aeon, I've only been 4 or 5 times, and each time I've been, there's a range of new shops. These are the types of typical FMCG and F&B operators, many of which came to Singapore 20, 30 years ago, went to Vietnam 10 years ago, and are now ending up in Phnom Penh, and many of those licenses are owned by young Singaporean or Malaysian entrepreneurs. I believe Starbucks has opened its second outlet, if that's important to you. Again, more purpose-built retail. Some of it is at the bottom of podiums, retail podium, at the top of mixed-use residential, mainly residential projects, some of which, as you can see, are very big, some of them being developed by local companies and some by Singaporean and Malaysian and obviously Hong Kong land from Hong Kong. These are big things because it changes the way that people spend their time at the weekend. Obviously, we're able to see that buyer profile emerging, and also what it does mean is that you'll see, not that you may have recognized Cambodians walking down Orchard Road, but it will mean that less money will be spent, less families will spend time in Singapore buying, coming to Ion, Orchard, etc. So this is important because it also will drive where people want to live. We've seen that successful downtown retail in emerging markets, not so much now in developed markets with you, but the people actually like to live in these blocks with there's a large active retail component, and that will involve gym. It will involve maybe after-school education for kids like Kumon or for English schools as well. The desire for all that is just as strong in Cambodia as it is here, where parents that have got a little bit of extra money will spend it on getting their kids to speak better English or do their maths test quicker. Where we are in terms of in the region, obviously, most of the big retailers are more interested in obviously bigger cities, but as these cities get very, very congested, as the number of mainly mainland Chinese tourists drops in Hong Kong, groups that have been in Hong Kong are now beginning to look at other emerging markets or indeed frontier markets. And you can see here, these are the sort of companies that we track. And certainly 5 years ago, if we mentioned Cambodia to any one of them, they would have just laughed. Now they're interested in. Some of it is chicken and egg, some of it's to do with affordability, and some of it is actually having the premises available. So when Hong Kong Land or Parkson or Aeon develops these malls, then people take Cambodia a bit more seriously. So this is an important thing, because they won't go, retailers won't go into markets where they feel that people will steal their ideas, steal their stock, or that there'll be a karaoke bar next to them. It's important to not just focus on Phnom Penh. Obviously, in Siem Reap and Singapore, as the ambassador said, there's development going on all the time, and so obviously much of the Siem Reap is dominated by retailers that like DFS, duty-free shops, are focusing very much on tourists that go for 2 or 3 days. Another thing that's being talked about a lot is gaming. So these markets really need regional airports. They need budget airports. They need a strong influx of winter tourists to get them through, or tourists from the European winter. And they obviously need security as well, as we all get worried about what's going on in other markets. But you can see the beaches of Cambodia are excellent, certainly in this particular area around Kep and Sihanoukville. Very underdeveloped still compared to Thailand and Malaysia. And I think certainly people that go there come back with, there's more to Cambodia than just Siem Reap and Angkor. Although it's very early in the story, the hospitality story, it's beginning to emerge. You can see here that most of the tourists in Cambodia from Vietnam, obviously China's catching up quickly. A lot of it is to do, as I said, with budget airlines and the capacity of the airport, which has now improved. But you'll see here some of the bigger names that are building, are beginning to have hotels built for them. Sofitel and Intercon have been longtime friends of Cambodia, but now we're seeing groups like Shangri-La, Rosewood, and other groups that are beginning to explore the opportunity. And obviously within that, there's a lot of the smaller 2 and 3 star operators that have found Thailand to be very competitive and are moving across. Hotel rates are very competitive. And service is excellent. When it comes to garments, Bangladesh and Vietnam have got probably more brand awareness than Cambodia, but again, when you go to a Nike or a Reebok or a Marks and Spencer's and you look at the labels, you'll begin to see Cambodia more and more, particularly for non-sporting apparel. And you can see here that there's the government's obviously knowing that labor is very cheap, have worked hard to try and get more and more awareness. I believe it's the Phnom Penh, as he said, that's just listed or is listing on Monday. And if you go there, it's not just garments. I believe the chap that was working there last year was telling me that they make some really quite high-tech devices there, including the vibrator in a hand phone. So again, Japanese companies that have been successful and that probably have just one other location often come to places like Vietnam and Cambodia. But again, you'll see that obviously this apparel market, footwear market is very, very competitive, and obviously Cambodia is part of the AEC but not part of TPP. And obviously if TPP goes ahead, they may well lose out as the Korean, Taiwanese, Japanese and Chinese want to relocate to a TPP country or a country that's in part of TPP. I think that in order to understand this market as an investor's point of view, it's important to understand just how how friendly is the environment. Obviously, Guillaume will talk about the law. How is it actually implemented, and how easy is it to get what you want, to explain what you want, to work with advisors and consultants. And we found, as I mentioned, our young staff to be extremely helpful. And when they realize what you want, and when they realize that they've got, if you've got an empty apartment and you want to find a tenant, or that you are coming to look at to buy property, they're quite resourceful and quite hard-working when it comes to, quite tenacious when it comes to finding what you want. Certainly, a lot has changed in the last 5 years, where most of the investors were looking at industrial parks or office buildings, and this whole market has emerged. PropertyGuru obviously is a leader in Vietnam, in Singapore and Thailand, but you can go onto the local portals and look at the information that they now offer. You'll find that they've completely copied what PropertyGuru do, and they do it in 6 different languages, including Russian, Chinese, and Chinese as well. So it's quite interesting how this market is maturing quite quickly, and what was something that was you could only find in Hong Kong a few years ago is now being copied and is now readily available in these frontier and emerging markets. I would look at an office lease of a property, whether it was residential or office, 5 years ago, and the difference between what the law and the way it was interpreted and what was written in a lease was just enormous a few years ago. Now it's a very, very much more international document. We find that all our documents are, certainly for business, are done in English. There's a high level of numeracy, a high level of written and English comprehension. Maybe not as high as the Philippines or Vietnam, but certainly increasing dramatically. So on that note, we're very comfortable with where Cambodia is at the moment in terms of the office market, in terms of the industrial market. Obviously, when you get there, and if it has been raining and you do arrive at 5 o'clock, you will sit in a 3-mile traffic jam that will take you half an hour to get into town. They are building overpasses, underpasses, flyovers, but that is a good sign. That is a good sign that people are buying cars. I believe they've imported them relatively cheaply from Thailand. The political situation there is interesting. It's extremely colourful. Guillaume will talk about that more, maybe. And obviously, it could be quite volatile. But for the moment, in terms of real estate, there seems to be a very strong demand as families move from maybe a traditional shop house to a small apartment. We can see that when in the properties that we manage, I think we manage about 9 or 10 buildings, the occupancy of these residential condominiums when they're finished is high. They are mainly Khmer families. They're not relying on foreigners exclusively. And again, that would be a huge indicator if the market's going to blow out. So the projects that are being built and finished, they seem to be well maintained. There's already a strong local property management capability. Obviously, it's nothing like what you've got here and nothing like as good as Thailand, but it's beginning to emerge. So all of the things that were a long, long way apart 10 years ago are beginning to come more into in a line. And it's, as I said, everything from the property portals to the property management to the way that the sinking fund is run, the way that appointments are made. So if you haven't been to Phnom Penh, it's obviously it's an interesting place. There's some extraordinary architecture left behind. There's some of the best French restaurants in Southeast Asia, but the key is how comfortable do you feel? How easy is how readily is there a secondary market? A lot of these markets, Hanoi, Ho Chi Minh, Da Nang, and Phnom Penh, you've got to feel comfortable that if you buy, who can you sell to? And do you have any? Is there any restriction on your rights to sell? And I think you'll find at the moment, certainly, there's a ready primary market. The secondary market, we believe, is still to be tested. The projects where there seems to be a parallel primary and secondary market for sure, but there seems to be some gap in the volume of the transactions done in the secondary market. And I think that's an important thing for you to be looking at. At the moment, everyone's buying off the plan, new projects, absolutely fine, mainly cash, but just keep an eye on the secondary market as well, because that's the indicator of the strength and the depth of the market. So very, very colourful, very interesting, much more transparent than you would ever imagine. There aren't many of the big international law firms there, but DFDL has been there, I think, 20 years, 25 years, and has got a lot of understanding. KPMG, PwC are there, ANZ are there, and some of the Maybank is there. I think one or two of the other Singaporean banks are there. It's a mainly cash transaction market, but colourful, interesting, and certainly one that you can no longer ignore. I think that's my 30 minutes. Good luck for the next person on the machine.